Hi, in today's video I'm going to show you a good strategy you can use to trade against spikes. Okay, and this strategy only works on boom 1000 and crash 1000, and right here is the strategy of which I had posted on December 2021. I know I've already made a video about this strategy, but in today's video I'm going to talk about the points I missed, and I'm also going to show you some tips on how to make it work even better. So make sure that you watch this video to the end because it's going to be worth it. So what is this strategy? So according to this video I made, actually, like, it can help you like scalp between 5 to 8 candles without having to worry about spikes. Okay, so this strategy uses default indicators in the MetaTrader, and let me just show you. But before I do that, as you might have noticed, like, I showed you this strategy using my phone, but in today's video it's going to be different. We're going to try it on the laptop and see how it works, and I'm also going to try to enter a trade and show you exactly how it is. So without wasting any time, let's begin. So what I'm going to do is I'm going to open my MetaTrader. This is my MetaTrader 5. So what I'm going to do right now is that I'm going to buy. By the way, this is a demo account. Okay, I'm going to click on buy. Don't worry, I'll explain why I've placed a buy order. So the reason why I've placed a buy order is because this black line is above the candles, and I'm going to close when the blue line crosses the candles. So let us just wait for that. So as I'm waiting for that, let me explain how this strategy works and the indicators. But before I do that, let me first show you the indicators which are currently here. So I'm going to right click and I'm going to go on the indicator list, and as you can see, there are about 4 indicators. The first one is the Ichimoku Kinko Hayo, and these are the properties. Let's go to Tenkan Signal 15, KUCN 15, and second span B of 52. Then the colors, as you might have noticed, my chart type has a white background. So the only thing you have to do is make sure that the first 2 are navy or blue and the rest should be white. And when it comes to the second indicator, the only difference is that the other one has got black. I think, let me do this. Let me make them to red. Okay, this will be better to explain now. So as I said earlier on, you buy when the Ichimoku Kinko Hayo, the line is below the candles, and you close when the blue Kinko Hayo crosses the candles. So this is crash 1000, and we buy when trading against spikes. I'll also show you when it comes to boom 1000. So the other indicator is actually the relative strength index, and these are its parameters. So the stars go to black, period 1 apply to close, and these are the levels 88, 50, 10. Okay, I'll show you how to use this. And in the relative strength index, there's an indicator called the moving average, which is this red moving average, and these are its parameters with a period of 7. Okay, method simple, and apply it to close, and levels, no levels, then that's it. Yeah, so now that I've shown you the indicators which are here, let me now like explain to you how you can use this strategy. Okay, so first of all, let me talk about zoom level. So let me zoom in completely. I've now zoomed in completely, but when you zoom in completely, it can actually mislead you. So what you have to do is count the zooms. Okay, this is 1, 2, 3. Okay, this is better. I think just keep it to 2, just like this. 2 or 3 is fine with you, as long as you're able to see clearly what's happening. Okay, so as I said earlier on, when it comes to crash 1000, you buy. Okay, let me just do this. So yeah, now let me explain. So I said when it comes to Clash 1000, you buy when the red Ichimoku line is below the candles, then you close once this blue line crosses the candles. So I'm simply waiting for that, then I'll close. So I'll probably make of about $0.5. That's when to close. So let me just show you some past examples. Okay, so for this, let me just zoom in. Okay, so a perfect example is here. Okay, you enter a trade when the red Ichimoku Kinko Hayo is above the candles, and as you can see, the blue line crossed the candles. Then you close here, you take your profit. Another example is here. You enter a buy here and you close here. Let me look for another good example. First of all, let me rub this. Okay, let me scroll. Okay, another good example is here. You buy here and you close here. Yeah, so it's simple. Like what you're supposed to follow here, it's simple. Okay, now that you've understood when to buy and when to close, how about the relative strength index and the moving average? How do you use it best? Okay, so the relative strength index and the moving average works nice if you are trading other boom and crash, such as boom 500, boom 300, and so on. So when it comes to boom 1000 and crash 1000, it's not very useful. If you want, you don't have to follow the relative strength index. You can simply enter a trade whenever the conditions over here are met. But in this case, if we just use the relative strength and the moving average, like what you have to follow is that before you enter a buy trade, make sure that the moving average is close to 10 or below 10. When it's boom 1000, make sure that the moving average is above 88 or below 100. That's when you enter a trade. Okay, so that's up to you. You can give it a try. So I also promise that if you watch this video to the end, I'll give you some tips on how to make it work best for you. Okay, but before that, let me just wait for the blue Ichimoku Kinko Hayo to close or to come below the candles, and I close this trade and I explain further. So let's wait for it. It does that. Okay, finally, as you might see, it is closed the candles, and I've now made of about $0.56, and that's what I was talking about. So what I'm going to do is I'm going to close this trade right now. Okay, so as you might have noticed, like I entered this trade just when I started recording this video, and I've made my first profit of 0.5. Okay, so this strategy really works out well. Like it is one of the free strategies out there you can ever try, which are going to show you good results. Okay, so with this strategy, it's possible that you can trade the $1 with it and triple it and make a $20 out of it. Like it's very reliable. So now let's talk about spikes, because finally spikes. Talking about spikes, here's another spike. Okay, so as you might have noticed, like we came out of the market and spike, there it is. Otherwise it would have caught us if we delayed. Okay, so now let me talk about how can you prevent spikes like this. Let us say, because it's not always that this strategy is going to work 100%, because there's some days when spikes will find you. Okay, so one thing I've noticed is that, okay, let me just do this. Okay, so this strategy may be good, but here's one thing you should know. For example, in a day, it's possible that you can enter 20 trades. Okay, and they may result in good profit. Let us say each trade is giving you $0.5 and you enter trades. Okay, so how much money can you make with this? So let me just try to calculate. So with this, actually I'm going to multiply 20 times 0.5, so you can make profits of about $10 if you enter 20 trades per day, and that's if there are no other spikes. Okay, that's it. If there are no spikes going against you. Okay, but let me talk about spikes. Like, how frequent do spikes happen while the trade is still there? Well, according to my experience, like, you can enter up to 15 trades, there will be no spikes, but sometimes they might be there, but they are few. But here's the bad part about spikes, that the money you're going to be making this strategy, you'll be making this money that is 0.5, 0.2 if you're using the default lot size, which is 0.2. And when it comes to spikes, is that when it comes to spikes, you want to lose 0.5. You want to lose $0.5. Actually, what you're going to lose is maybe a $3. Okay, sometimes maybe a $5 if a spike is long. Okay, so this means that, for example, if you spend an entire day making 20 trades and you get to have let us say you get in 20 trades, let us say you have 3 spikes. Okay, and each spike gives you a loss of 0.4. okay, and each loss actually gives you a loss of, so what I'm going to do is simply going to multiply 3 times 4. That should be simple, and it's going to give us -12. Okay, so this means that if you spend an entire day making 20 trades giving you profits of $10, and in those 20 trades you get to have 3 spikes, which like makes you lose $4 each, you actually make -12, which means that all your profits get eaten up by the spikes. Okay, so there's no workaround when it comes to this. Like, yeah, the strategy does really work, but when it comes to spikes, is that you lose triple than what you are making. Okay, so according to my experience, is that you'll be able to make profit, but the spikes will able to find you, and you end up making losses even if you had plenty of trades which were in profit. Okay, but this strategy is good if you want some quick money. So it's good for just for some quick profits, not in the long run, because in the long run spikes will find you. Yeah, so these are the tips I told you that if you watch the video to the end, I'll tell you about them. So that's what happens. But otherwise, if you do not want spikes to be catching up on you, what you can do is you can try to follow the relative strength index, or you can simply try to go on a higher time frame and make sure that before buying, make sure that the chart, make sure that price is in an uptrend. So let me do this. Let me go to the 15 minutes time frame. Okay, so as you can see, like, the uptrend is over, price is now in a downtrend. So even if we bought that time, we are not supposed to buy, because price is in a downtrend, and because of that, spikes will always find you. Okay, so finding out if price is in an uptrend or downtrend is actually a good idea before entering a trade, to avoid yourself having unnecessary spikes. Okay, I'm done talking about crash 1000. Let me go to boom 1000. So boom 1000 is here. So for boom 1000, you actually sell. I've already missed a good entry on boom 1000. Okay, so for boom 1000, you simply wait for the red Ichimoku to go up above the candles, and when the blue Ichimoku Kinko higher goes above the candles, you close. So I've already missed this trade. Okay, so I said that you buy. So if you'd like to reduce some spikes, what you can do is, before entering a trade, go on a higher time frame and find out if price is in an uptrend or a downtrend before buying. Okay, yeah, so I guess this is it about today's video. I hope it was informational. Yeah, so if you learned something from this video, give it a like. For more videos like this, go on and subscribe. So before you leave this video, if you're looking for something reliable that can really help you in trading, I've got some cool stuff on my online shop, both free and paid. So the link is in the description. Bye for now.